from Wall Street, Kathy Jones of Charles Schwab, writing, uncertainty means less easing and a steeper yield curve. Layer in wars in Europe and the Middle East, and the potential for higher energy prices, along with the outlook for the economy, suggests a potential growth slowdown and higher inflation. I'm pleased to say that Kathy joins us now. And Kathy, this is, of course, something you wrote over the weekend because there are a lot of uncertainty even before you add on what happened in the Middle East over the weekend. It's been a very muted market response. What do you make of that muted market response?
Well, hi, Danny. Good morning. I'm a little surprised there isn't a bit more long-lasting response, but as your coverage indicated, people may simply be waiting to see what the next step is and react to that. And indeed, in my lifetime, there really hasn't been peace in the Middle East. So I guess markets to some extent are inured if it doesn't disrupt the flow of oil, if it doesn't close the Straits of Hormuz or create some sort of economic effect in the near term, then markets are going to take it in stride. But I do think that we're still all sort of nervously watching the situation, trying to assess what the longer term impact will be.
If we attempt scenario analysis, Kathy, and we decide or we game out a situation where the Strait of Hormuz is closed or oil is seriously disrupted, what is your assumption on where we go from here?
Well, I think we get that steeper yield curve. And in fact, everywhere I look, I just see risk rising, right? We just have so many
oil prices are going up and up and up because of this new debacle in the Middle East with terrorist Iran. Your gas is going way up, people, to fuel your cars. Wow. Gas is going up, oil is going up.
Maybe somewhat in corporate spreads. We haven't really seen much response in corporate spreads, but you could see some expansion of spreads there. It's just, it's very hard, I think, for markets to dive in at this stage of the game, for investors to say, okay, path is clear. I'm going to take on duration risk. I'm going to take on a lot more credit risk. I think there's just a wait and see attitude. And if things deteriorate from here or get more complex, then you'd want to see, you'd want to have a higher risk premium to compensate you for those risks.
Kathy, what happens if we don't get that clarity? I'm even thinking about the next couple of weeks, how much risks there are around the one big beautiful bill in Washington, D.C. That self-imposed deadline comes in July. You also have the self-imposed deadline of tariff discussions. That comes up at the start of next month, too. If we don't get clarity on these issues, do we just continue to see investors on the sideline? Does it become something of a frozen market for the rest of 2025?
Well, I'd say it's sort of a range trade in the fixed income markets then. Yeah, we've had volatility early in the year in say the treasury market and in fixed income markets in general, but now it's settled into kind of this sideways range where you react and you get 10 basis points in either direction, but always coming back to, say, on the 10-year, 440, 445, just kind of bobbling around here, waiting for some clear direction. And I think that we could see somewhat of a frozen market in that sense where, if you're an investor, you just want to stay in some safe zone without taking on too much risk until you have something to hang your hat on. And unfortunately, most of the risks that we're looking at are negative for the market. So as you mentioned, the budget bill could certainly boost deficits and increase supply. Perhaps disruption in the Middle East could boost inflation via the oil market. But at the same time, the credit markets have to worry about what impact that has on trade, and corporate profits, et cetera. So I'm not surprised the market's just sitting here on edge waiting for something to hang its hat on.
Well, Kathy, we really appreciate your time this morning.
And this is why I bought an EV, a Tesla. I don't have to worry about buying no gas. Tesla stock will go up. It's a good thing for Tesla. It's a good thing for EV drivers. No buying gas. Gas is getting high. Going to continue to get high.